Shouldn't industrials be doing better if this really is a more lasting inflationary story? They're not doing too hot this week.
No, I think, look, a lot of investors are worried about some of the cyclical names they may have run too far. They have the same idea when they think about kind of the travel hospitality perspective. But on the other side of that, what you'd also suggest is that the amount of recovery is going to be probably greater than what we've seen in the past. For example, with consumers with $2 trillion plus of incremental savings, they're going to go out and want to party a little bit. If you think about the need for capital spending, if we are going to get things like infrastructure policies kicked in, you're going to need more equipment that's just sitting around available to you. So I would argue you're going to continue to see some of the better stories out of the CapEx opportunity. Now, technology is a CapEx beneficiary. The problem is that they have been substantial winners over the past year. And in some cases, the stocks ran a bit too far as people got overly excited.
Do you fear that that can now unwind and that there's more downside, or do you think we found a little bit of a bottom today?
Well, we have found a bit of a bottom today, but again, I think the kind of proof of the pudding is going to be what does inflation look like, not over the next month, not going to get resolved the next week either. It's more over the next 4 or 5 months. And as you get closer to August, September, think about the things that you've got to address. You have to address the inflation potential issues and higher bond yields. You have to address what will the Fed be saying around Jackson Hole, what's with the budget and taxation, what's going to happen with debt ceilings. All these things are going to coalesce around August and September, and they're kind of challenges for the market to resolve. So could you get a little bit of bounce because people overshot, in a day or two? Yeah, but, I'm an investor. I'm not a trader.
Is there any part of tech you like, Tobias? Because you've got the semis with their own sort of secular growth story, and they're having a nice move today. You've got the mega caps, which are seen as a little bit more defensive, like the FANG stocks, and then, of course, more the hyper growth momentum names. Or are you just staying away from all of it?
So, look, we like large cap over small cap in this sense. And your point about maybe they're higher quality in the bigger cap names, they have the ability maybe to buy back their own stock and things like that when things pull back. So they're probably a little bit better place to kind of, if you want to hide out in tech. And I'm not saying hide out, but I'm trying to suggest on a relative basis, they look more interesting. I think in the hyper growth area, that's where you have the real problem around bond yields potentially moving higher and really hurting the terminal value, the kind of long-term value of the company as discount rates move higher. So they were the ones kind of almost in the sniper scope. And as there's attitude change towards potential inflation lasting a little bit longer, those probably are not going to kind of delve into this. They're not cheap when many times revenues. And that's the kind of stuff you got to worry about.
Shepard Smith here. Thanks for watching CNBC on YouTube.